Right, guys. So the purpose of this session, right, is to help you to build your confidence with your entries, is to help you to become more consistent, and also, to basically help you to increase your reward and reduce your risk when you enter the market. So I'm gonna show you guys a few things that you can literally implement, no matter the chart, no matter what it is that you're how you enter the market, no matter really and truly like the time frame you enter the market. Of course, I'm gonna give you a time frame to utilize this on so as to, once again help you with your confidence, right? So that you could just do one thing, yeah, and be consistent in that one thing. And then, obviously the more that you see it, the more that you do it, and then the more comfortable you will be entering the market, when you see it happen. Okay. So few things we are gonna talk about today, right? Those simple things, right? So first and foremost, we are going to be talking about engulfing, engulfing candles, all right, slash order blocks. Where all right, engulfing candles slash order blocks. We are going to be talking about imbalance, all right, imbalance. And at some point, we're gonna talk about breaking structure, changing character. Okay, I'm gonna keep it simple. By utilizing this term, right? A structure shift. Okay. So overall, we'll be talking about entries. Okay. Everybody clear? Everybody got it? You ready? Taking notes. All right. These are the things we are going to cover tonight. All right. Now, great, great, great. Guys, give me 1 second. Okay, 1 sec. All right, let's go. So first and foremost, so if you don't know what an engulfing candle is, I'm going to first just give you an example of what an engulfing candle is, all right? So that you are clear on that. Then we're going to talk about the imbalance. We're going to talk about everything else, okay? And again, literally what I'm about to show you, like I said, you could execute this, all right, as is. And I'm gonna show you it over and over and over so that you can become comfortable with it, right? And then you can, of course, go ahead and practice it, on your own, all right? So first, let's talk about engulfing candles. When you talk about engulfing candles, usually this is what it looks like, right? It's usually a candle that engulfs, right, or takes out another candle. Okay. Um, Let me not extend this. All right. It's usually a candle that completely engulfs a previous candle. So a bullish engulfing candle, for example, you may see a big candle like this, taking out a previous sell candle, right? That may look like this. Okay. Oh, so when you see this engulfing candle, this candle engulfed this candle right here. These candles you want to pay attention to. All right. Why? Because it shows you momentum. It shows you where the buyers are at in the market. It shows you this area here, right? A number of orders, of course, went into the market that caused price to push up significantly. Okay. So that's one example. On the sell side of things, of course, then you would see, right, it looking like this. Boom, big sell candle, right? Engulfing a previous buy candle. All right. Very simple. Okay. So this would be a bearish engulfing. This would be a bullish engulfing. So this is sell pressure to the downside. This is buying pressure to the upside. Now, It could also, you may also see different variations, right? Whereas you might see like very small candles, maybe like this, right? Where you see uh like wait, like this, all right? It may be a white candle. Yeah, next candle is followed, boom, like this. Okay, dolphin candle. Okay, same thing on the flip side, right? When it comes to the cells. So don't get confused and think, okay, well, it must look like this. Absolutely not. What you're looking for is momentum to either direction in the market. Okay, you're looking for momentum. You're looking to see where the price push up significantly or price push down significantly. Okay, so this could be once again, right? A sell candle, okay, and followed by a big sell to the downside. Okay. Another example, you may see three, you may see three bullish candles to the upside. All right. You may see price pushing up like this, boom, 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 right? One after the next. Yeah. And then of course, the same to the downside, right? The same to the downside, showing that bearish momentum. So you may see three bullish candles like this, bam, 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 all right? And then once again, all right, once again, you may see three bearish candles to the downside, all right? So everybody following? Pretty simple so far? Everybody following me? All right, pretty simple. So we clear engulfing candles, yeah? This is what you want to see. All right, you want to see momentum. That's what we're looking for. We're looking for momentum. We're looking for strength. Great. Now, what we're going to do immediately, let's go to the chart, right? We're going to start to look at these things, identify them, get you comfortable so you understand everything that I'm saying, okay? From a very practical perspective, okay? I like to keep things very practical, okay? So let's look at chart. All right. So it doesn't matter what time frame you're on. Trust me, you are going to find and be able to identify engulfing candles. All right. So for example, if we start from right over here, let me just zoom all the way in so that we can see. All right. Boom. All right. We have bang, engulfing candle momentum. All right. We got engulfing candles here to the upside, bullish engulfing candles. Yeah. Price pushed up significantly here. All right. Market continued to go up. Once again, like even back over here, we have engulfing candle here to the upside. All right. Remember, I told you it could have like a small bullish candle before. Yeah. Engulfing candle. All right. You're looking for that momentum. Okay. So to the downside, so remember, like just look for the big candles. Okay. So if we're here, engulfing candle. Okay. And then to the downside, engulfing candle right here. All right. You seeing it? And here, engulfing candle to the downside. All right. So price pushed down significantly. And before it was a sell candle. Okay. And then price drop. Boom. All right. Here, another engulfing candle. Just get familiar, just get comfortable seeing it. Engulfing candle, bullish engulfing candle. Okay. All this, we're just on the 15-minute time frame. Okay. Here, bearish engulfing candle. All right. Bearish engulfing candle. So we got that one, two, three. See price push down. Okay. Let me give you a very clear example here. So we got one, two, three to the upside. Okay. Just get comfortable, just get accustomed. Here, all right, you see how price just pushed up, all right, but clear, you see the clear engulfing candles, okay? So if you have to go on a higher time frame, right? If you have to go on a higher time frame, so all throughout the chart, you will see it. If you go on a higher time frame, let's say we start from, let's say we did the daily, for example, right? Let's say we did the daily time frame. So, all right. Let's say we did the daily time frame. So you're comfortable and accustomed to seeing this. No matter the time frame, you are going to find engulfing candles. Like here, boom, big bullish engulfing candle, right? 1, 2, 3 here, right? Engulfing candle here, engulfing candle. So engulf the sell candle right here, okay? To here, engulfing candle to the downside, right? Like you see on the daily, we more so got bullish engulfing candles, right? Bullish engulfing candle. Then here to the downside, we got bearish engulfing candle. Fine. All right. Then here again, engulfing candles. Okay. So that's on the daily perspective. If you come to the 4 hour, yeah, you see bearish engulfing candle, bullish engulfing candle, bullish engulfing candles, bullish engulfing candles, bullish engulfing candles, bullish engulfing candles. All right. Bullish engulfing candle, bullish engulfing candles, right? Bullish engulfing candles. Okay. Um, like for the clear ones, right? Bullish engulfing candles, bearish engulfing candles, bearish, engulfing candles, and so on and so forth. You guys get the point. Okay, so everybody that you comfortable, you're familiar now, you see what it is we're looking for. We're looking for that momentum, where the momentum is at. And most importantly, you want to like really look for where the momentum began. All right, like where it began. So like sometimes, of course, like in areas like this, like we're in the forward time frame, we just got a lot of momentum to the downside. So really our attention, like in situations like this where you have like big, push to the downside or in one direction, we are really looking at like where it actually started. Right? That's where our attention is really at, where the momentum began. Okay? Because where the momentum began is usually where it revisits. We're gonna write that down, right? Where the momentum began is usually where the market revisits. Okay. So I'm gonna say it one more time. Where the momentum began is usually where the market revisits. Okay, so if you keep that in mind, I'm telling you that's gonna help you so much. All right, it's gonna help you so much. Now, what I want you to notice about engulfing candles, once again, all right, is remember, like I said, that is where the momentum began. Okay, and that is where it will revisit. All right. But when it revisits the area, more often than not, you get the momentum again. So I'm gonna give you an example, right? So that you see, understand why you want to be looking at these areas. All right. So here, for example, we have a bullish engulfing candle. Okay. We have a bullish engulfing candle. Okay. So if we look at where the momentum began, now the way or the best way to identify, right? The best way to identify, let's see if we could get back to where we were. Hold on a second. All right. So the best way to identify where it basically began is to utilize the candle that got engulfed. Okay? Utilize the candle that got engulfed. What do I mean? For example, this sell candle got engulfed, right? Which means the beginning of all of this momentum to the upside, of course, started, within this area, right? And it would only be considered to be a valid engulfing candle if we took out, like the previous candle, right? It got to engulf something, okay? So for us, this area from the top of this area to the bottom of this area, this is what has our attention, okay? In this area here has our attention. from the open to the close of that candle. That has our attention. Okay. Because that's where the momentum began. So on the sell side, then it is from the open to the close of that candle. This area here is what has our attention. Same thing here, all right, from the wick to wick, this has our attention. From the wick to wick, this has our attention, all right? This, in this scenario, right, we would utilize the first candle, right? So follow me here now. The first candle that created the move, right? So like this now, all right, you would use this area here, right? This is what started the momentum. This is what started the momentum, okay? This is your area of interest. This is your area of interest. This is your area of interest. This is your area of interest here and here. Are you following? I'm taking you guys through this step by step, simple process. So I'm in the chat that we are following. We all good to go. Okay, awesome. All right, back to the chart. All right, back to the chart. So we're gonna go back on the 4 hour time frame that we were on. All right. So remember we said we're looking at the candle that got engulfed. That is our area of interest. All right. So boom, here. All right. So if you look at this candle engulfed this sell candle right here. This from the opening to the close. This is our area of interest. Okay. So remember, what we're looking at is where the momentum began. So we see, yeah, the market pushed up, all that good stuff, phenomenal. Guess what? Price came all the way back. And when it came back, right, remember what we mentioned as well, not only does it revisit the area, more likely than not, it is going to create the momentum once again. It's going to push back up in that particular direction. Okay. More often than not, that's what we're gonna get. Okay. So the thing is that, we don't need to be right 100% of the time. Okay. We don't need to be. We just need to be confident in what it is that we're doing so that we can execute, right, with as much confidence as possible. It doesn't mean that every time you're going to win the trade. Absolutely not. But you know that you are executing based on your simple system. Okay. So, for example, once again, we have engulfing candle right here, right? Look at the candle that got engulfed, right? This sell candle, right? From here. Now, in this scenario, right? Now that we doing this in real time, in this scenario, you see we got a wick at the bottom of this candle. It's not just a clean, flat bottom, right? Like this one, right? We got a wick at the bottom of this candle. Take into consideration the wick as well, right? So we got a wick here on the buy candle, the bullish candle. Take into consideration the wick as well, okay? So we're going to take that from the top, literally to the bottom. And you could do this, guys, like on any time frame. I'm just showing you on the 4 hour. But no, please note, the higher the time frame, the stronger the area. Okay, the higher the time frame, the stronger the area. Okay, but along with that, all right, we don't enter on these high time frames. This is examples. This is to get you comfortable. This is to help you to understand, right, just from a bigger perspective first. All right. So you see here, for example, we got engulfing candle. Guess what? Market came back right into the area and then we pushed again. All right. Now, I'll show you from the sell perspective. So we have here engulfing candle to the downside. Okay. Then we have this is the candle that got engulfed, taken from the opening of that candle. And remember, we're going to take the wick into consideration as well. Okay. You're going to take that weight into consideration, and this is the area of interest, right? Price came back right into that area, then we pushed down, okay? So we came here, once again, we got another push, right, to the upside, price engulf this candle. This is our area of interest from here to here, right across, all right? Let me see how price, boom, came right back into the area and then pushed up again, right? As we continue, you'll see that here, for example, another engulfing candle, right? How price trades into the area and then we get the push out, right? Same thing here, right? This engulfing, price trades into the area and then we push off, okay? Everybody following? Right? And we could continue, we could go through charts over and over and over and over like that. Like for example, again, here on the sell side, right? This is the area here. And you see how, when price comes into that area, you still get the reaction, market pushes back down. Right? Price comes in, pushes back down, comes in, pushes back down, right? Because the momentum here, yeah, was on the sell side. Once again, right here, all right, you have all right? I'll price traded into that area and then boom, push down to the downside. Engulfing candle here. You see how when price traded into that area, how it pushed back up. Okay. So everybody got a better understanding of engulfing candles, right? So you can see it. You see how it happens. Right? You just mark it out. All right, you see the candle that got engulfed, right? And then, all right, you see how price pushes off all of those areas, all right? Let me know if everybody following. Okay, good. Any questions so far? Any questions so far? Are we good? We could keep pushing forward. Okay, good. Absolutely not. All right. So remember what I said. This is for example purposes, right through. You will never enter the market on a 4 hour time frame. This is for you to understand what engulfing candles are. Okay. So what we do is just like I showed you that on the 4 hour time frame, we show you on the 1 hour time frame. All right. So the lower the time frame, we get more precise with the market. Okay. So I'm gonna use the same areas, all right, that I just showed you so you can see as we like refine it. Okay. As you'll see, same engulfing candles in the area, but the area becomes smaller, which then means, like I mentioned in the write-up, that you can now reduce your risk and increase your reward. All right. So let's look at this first one, for example. Remember, this was only 4 hour, right? This was the area for 1 hour time frame. We can make it smaller now, right? So for example, this is the candle that got engulfed, right? And this right here is the wick on that candle. Look at the area. We got more precise now with it. So we know the area, as opposed to looking from up here all the way down here, etc., the area became much smaller, right? And look, boom, price came right into that. Okay. Now here, this was the area that we had on the 4 hour time frame from here to here, right? And guys, this is very important, right? Because and even for me, like as it was when I was learning how to trade, right? And although this may seem very, 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 very simple, it's like this is like so profound. All right, it's like this is the entire area here that we're looking at on a 4 hour time frame. This is the candle that would have got engulfed from here to here. We just saw that, right? On the 1 hour time frame, we could see, right, everything that basically occurred within that area. But we also get more precise now. We can see, okay, well, we don't necessarily have to pay attention to all of this. Yes, it is very valid, right? It's very valid. It's good to know that this was the 4 hour candle, but on the 1 hour time frame, now we can say, okay, well, great, price came, like we could come down to this particular area and focus from here, right? And then we see here, how, for example, like in the scenario that this price might have missed, that area just slightly, where is that we were looking at, all right? Once again, here we have, right, bit 4 hour. This was the 4 hour area. We bring it all the way down to the 1 hour. We're looking at the candle that got engulfed, which was then here. All right. Boom. And we see how price came right down into that area and then pushed off. Okay. Hope everybody's following. Okay. Everybody's following. So even like here, right? This particular candle, one that we might have missed right here. All right. See how price came right away down into it and then pushed up again. Here, once again, same area really on the same area on the 1 hour. As you guys see, right, it's important, right? You see how I stretch out my screen, like you pull it down, expand it, very important, right? I mean, that alone could cause you to like do craziness when you're trading. Like you're looking at a chart like this, it is of no help. You can't see anything, right? Open up your chart, right? Stretch it out, see what's going on, right? You want to be able to see the trend, right? That's like something so simple that many individuals don't do. Okay, stretch it out, right? Drag it up, go to the side and just drag it up, you know, so you can see what's happening. Okay, so here once again, we on the hour, right? We got the candle here that got engulfed. This one was a little, choppy, probably like as soon as the market opened or maybe some news or something, right? So, let's just for argument's sake, we can just take the entire candle here, right? Because really true, this is nothing down here. You know what I mean? Like I would say this kind of like not invalid, but like you wouldn't go on anything, just with this, to be honest. Yeah. But for example purposes, you see, for example, we got tight to the area, price came back down right into that area as well. Okay. Same thing here. No, on the sell perspective, right? Candle that got engulfed, take it up to that particular candle. And we see here, for example, price came right back up into that candle, and then we got the push down, right? For the upside here, this candle, you'll be looking at here, right? With this wick included, and price came just shy of it, and then and then pushed off here. Okay, once again, here sell candle to the downside, engulfing a bearish engulfing candle to the downside. All right, pull it up here. You see how price came back up and then pushed down. Okay, we following? All right, so remember we were on the 4 hour, it just came down to the hour. All right, just showing you guys what this looks like. Like you can see now, okay, cool. So on the hour, I will be more precise with my area, right? I'm getting more, I can now reduce my stop loss. I can now tighten up on my entries, etc., right? So that's on the hour. Julia has a question. Sure, go ahead. You want to unmute your mic? You want to type it? Let me know. Let me help you out here. Juliet.
Hi, good night.
Hey, Juliet.
Hey, can you go let me think doing now. Can you go back come back across to the one that had the cell with the very long wick? Right. So for the entry, would you put your entry where
We ain't going there yet.
um
Don't go there yet.
oh okay, okay.
Yeah, yeah. Don't
No
don't go
problem.
there yet. We can get there. Don't go there yet.
Oh, okay. No problem.
Yeah, yeah. All right. Yeah. We're gonna get to the entries, all that kind of stuff, guys. Right? We're laying, and this is where I want your mind to stay here now. Right? Stay at this particular point, right? Because we laying the foundation first. Because once you got this, right? Like if need be, shut down everything that you know right now at this point, right? Just to take this in, right? Just to take this information in, from a completely clean slate, right? So that it doesn't impact, well, already doesn't really necessarily impact how you approach this. Okay. So like just literally take this for what it is. Okay. So on the hour, right? You guys remember what we're looking at. Okay, the hour, the 4 hour, it don't matter. Grab the principle. Always remember this. I'll teach you guys principles, not necessarily strategies. Okay, like because once you grab the principle, you could create whatever strategy you want to create out of it, to be quite honest. Right? Because the principle is a principle and principles are universal. Right? It doesn't matter. If it's a principle, it's gonna work. Yeah, like like the principle of I guess the universe is we're gonna stay on the ground, we ain't gonna just float up in the air. That's a principle. That's you know what I mean? Like those are laws, right? And these are the laws of trading. Okay. So yeah, just take this for what it is, right? Because we're gonna bring it further down. They're gonna show you like where we're going with all this. Okay. So on the hour, that's the hour, right? We're gonna drop now to the 15 minute. We're gonna do the same thing. Okay. Watch this. We're gonna do the same thing. Always remember this. The lower the time frame, the more precise you get. Okay. The lower time frame, the more precise you get. Okay. We're coming all the way back to what it to the first one that we created basically here. All right. Cool. Which was on the 4 hour, then we came to the hour. Now we are at the 15-minute time frame. Okay. So now here, 15 minute, this is where we are at. Boom, we're looking at this candle that got engulfed. All right. We just got a little bit more precise with the area. And we see how price came, bang, right into that area. Okay. Same thing here again. We're going to get a little bit more precise with this area here. We're going to use this engulfing candle right here, right? And all of this, you'll be able to see, okay, cool. The more precise you get could also mean, you can miss trades, right? That's fine, right? We're not here for perfection. We're not here for 100%. We are here, right, to increase reward, reduce risk, okay, and build consistency. Okay, so this is your engulfing candle here, all right, and we see how within this scenario we got tighter with the area, and price missed, right, where we were looking at. Okay, nonetheless, we have this engulf. So this area here now, 15-minute time frame. All right, we are at here, all right, with your on the 15-minute chart. All right, you see how slightly missed once again, slightly missed that entry right here. All right. But we see the areas that we're looking at. All right. So we know, okay, when price comes into that particular area, you know what you're looking for. So this is on a 15-minute perspective. And we're gonna come all the way up. And you can see on the 15-minute time frame now, you can see even more engulfing candles. Anybody notice that? All right. You can see even more engulfing candles. Let me know if anybody noticed that. All right. Because now is that we could pinpoint, like, for example, like this. We could pinpoint this. All right. We could pinpoint, a lot more engulfings and so forth in the market. Okay. Right. Anybody notice? You see, yeah, yeah, right. You see way more. Okay. You see way more happening. All right. So even as we come across now to the area here, so we're going to use all the areas that we marked out before. All right. So right here, engulfing candle. All right, included it. All right, price traded into it, boom, pushed up. Okay, you can see another engulfing candle right here. All right, and you see how price, boom, came back into it, then we pushed up. Okay, once again, same thing. This area, I mean, that is not much of anything, really, truly, guys. All right, nonetheless, all right, yeah, like, that candle is not even really like, I haven't really printed anything, to be quite honest. Okay, but price came back into that area, pushed up. Okay. Here, engulfing, this is that messed up candle that we were looking at. Right. You see how it actually looks. So price just, pushed up there. All right. You know, that would take you like back down within this area. No real candle printed here, right? Like price just skipped and so forth, right? We see how the market came back into that area and then pushed again. Okay. As you whole promise, right? When you guys capture, just capture, understand what's going on. Okay. So 15-minute, all right, same thing, engulfing candle, boom, all right, just more precise. And you see buying price top the area and then started to push down. Okay. Here, we got like a big area here on the 15-minute. All right. I price traded into it and then pushed up as well. Then we are here. So for this, no, you remember you're looking at the candle that started to move. So you're looking at this first red candle right here, right? The first bearish candle, price traded into the area, and then boom, pushed down. All right. So we following? Everybody still with me? We're keeping it simple. All right. We're keeping this so simple. Yeah. So these areas now that we marked out, all right, would be considered to be your order blocks. Yeah. These would be considered to be your order blocks. All right. Like this is where basically all the orders went into the market. Okay. These would be considered to be your order blocks. All right. Remember we spoke about engulfing candles or order blocks. So basically two, tie into one another. Yeah. So these would be whoops. All right. These would be considered to be your order blocks. So this area, order block, order block, order block, order block. All right. Order block. It's how you identify your areas or potential areas of entry. All right. Order block. Okay. So, and then we should be clear on what it is now. All right. Because we just went through it. Got the engulfing candles, we got the order blocks. We clear? Now, for argument's sake, we're going to go down to the 5-minute time frame and do the same thing. All right. So we're going to start from here and we're going to go backwards. All right. So once again, candle that created the move, boom. All right. No, no. Let me say this. All right. Let me say this though. You don't necessarily have to go and do this on a 5-minute time frame. Okay. You don't necessarily have to do this on a 5-minute time frame. That's a little bit too precise and you can miss a lot of trades. All right. You can miss a lot of trades, being that precise in the market. Okay. We take the 5-minute time frame strictly for entries. Okay, strictly for entries. So to the question earlier, right, you are going to be entering the market on a 5-minute time frame. Please write that down. Okay, your entries will come on a 5-minute time frame. I'm just showing you this to so you understand, like, regardless of whatever time frame you're on, you will see engulfing candles. You will be able to identify them, okay? But you don't want to get caught up in like the smaller time frames, when it comes to all the different engulfing candles, okay? All right, so they always say the lowest to go is like the 15-minute time frame when it comes to these engulfing candles. All right. Like don't go lower, right? When you're looking for an area of entry. When we get precise now, like when price actually trades into the area, then we go to that 5-minute time frame to confirm entries. Like clear? All clear? All clear? Awesome. All right. Let's keep it moving. So, for example, once again, all right, like, I'm just showing you that you see here, for example, a price came into that particular area, right? But back the end stand on this standard, all right? Price came back to that particular area on a 5-minute time frame. Okay. You can come right away across. All right, so you see, like I mentioned, 5-minute time frame, it could get too precise, all right? Because then in a scenario like this, you'd be looking down here. All right, we'll be looking at that area, to precise. Yeah, those are the missed trades. All right, let's go further here. Then you'll be looking at a back up here. All right, so it's just to strengthen the point, why not to, like pull everything off of the 5 minute. All right, so that here, you miss the area. Okay. 5 minute. All right, 5 minute. Well, we're not gonna use that one. All right, 5 minutes. And remember, stretch out the screen, all right, so you can see more. All right, 5 minute would be like back down here, all right, to precise. Now, I'm not even gonna mark it out, all right, back down here, all right, this is where you'll be looking at on a 5 minute. And then here, this one wouldn't be bad at all. This would be very clean, all right, because you'll be looking here for your entries and so forth, all right. So trust, and then once again, you see on the 5 minute, got like a mild amount of engulfing candles, all right? You can see them all over, bam, all right? So you're gonna see them like here, and then here, another one here. Like it's gonna be all over, all right? So don't really get caught up, okay? Because you could lose direction of the market very, very easy, okay? You could lose direction of the market very easy, okay? So back to engulfing candles and so forth, all right? I trust that some light bulbs going off now at this point. All right. Everybody's like, okay, all right. Something clicking. All right. You're not sure we're clicking yet, but something clicking. All right. Something clicking. All right. We're getting there. We're getting there. All right. All right. So we got the area now. 15-minute time frame, 1 hour time frame, even is fine. All right. I feel like it would get lost. Don't get lost. All right. Don't get lost. The lower the time frame you go in, that's when you get lost. So don't get lost. All right. Identify the area. Okay. Identify the engulfing candle. Great. Those engulfing candles, right? Those engulfing candles basically allow for you to be able to identify, like I said, your order blocks and also your supply and demand zones, right? All supply and demand is really and truly supply is where the sellers are, demand is where the buyers are. Okay. Once again, when price comes into those areas, expect reactions in the market, expect the market to push back up, right, in the direction, right? So if it's a demand or if it's a bullish engulfing, expect the market to react bullish. If it's a bearish or if it's a supply zone, right? If it's a bearish engulfing or if it's a supply zone, expect the market to react bearish, right? Now, here are I think I stretched out the screen so much. All right. Uh, it's not too good. We bought here. All right. Good, good, good. All right. Good. All right. So here's the important thing, with all of these engulfing candles, order blocks, etc. Right? You got to be on the right side of the market. Right? Okay. You got to be on the right side of the market, which means you cannot forget or negate um market structure. You can't. It's just impossible. Okay. So for example, you need to know whether you are trending up, right? You need to know whether you are trending down. All right. And you just gotta know, is the market going up or is the market coming down? All right. Because the areas that we are looking for, and you'll notice the areas that we're looking for these engulfing candles or the areas that we're looking for, these are the blocks will literally, guys, be at these points here. All right. Like you will see, for example, this may be your order block, right? Right here. So we're looking for price to come back into that area, then we get the push. This may be your order block, right? Looking for price to come back into the area, then we get the push. All right. So then once again, this may be your order block. We're looking for price then to come back into this area. All right. And then we get the push. All right. Everybody following? Because then on the sell side of things, now same thing. This may be your order block. So you're looking for price to come back into that area and push down. Here, here. Okay. So we can negate structure, right? You gotta know I'm looking for sells, I'm looking for buys. Then you look for the engulfings. Okay. Then you'll be able to identify them easier. You know which side of the market you're trying to be on. Okay. Now, so everybody got that? Everybody following that? Like that's pretty simple, pretty clear. I'm gonna show you the chart afterwards as well. Same thing. All right. Just make sure everybody good. Okay, all right, awesome. No, here's the thing. So remember, we spoke about, I'm gonna come back to imbalance when we get into the entries and stuff, all right? So we spoke about break a structure or change of character. Basically, just remember a structure shift, right? Sometimes you will see me post. Have you guys ever seen me post in the education chat, telling you guys just wait for a structure shift, like when it comes to the entries and so forth? Have you ever seen that before? Yeah? Okay, good. Okay, good. Yeah, that's today. Okay, cool. So we're gonna talk about that as well when we get into the entries. All right. So break a structure, which is gonna help you to identify direction of the market. Okay. So here, all right, every time price breaks a high, or every time price breaks a low, it will be considered to be a break of structure. All right. So this helps you to confirm direction of the market. Okay. So basically, when this came up, all right, and brought past that particular high, right, we got a break of structure which confirmed that the market was going to continue to go up. All right. So all we're looking for is price to come back down before it continues to go up. So for example, you see people start to trip, the market flying, market going up, all gold's running away, this happening, is buying, is buying, is buying, jump in to buy, right? And then they jump in, they buy up here, and the market pulls all the way back down here. Why are you buying up here? Right? Like don't get caught in that, right? That fear of missing out. Oh, market, buy it, buy it, buy it, jump in. Absolutely not. Don't jump in. Do not jump in. Do not listen to your mind that says jump in, right? You're gonna get the perfect entry in the wrong direction, right? You're gonna get in right here, boom, and market gonna drop. So you jumping for a bite. I mean, so don't jump in. You're waiting for a price to come back down. Remember, we're looking for entries around these areas here. Okay. All right. So it confirms whenever it breaks, it just confirms the market is going to keep going up. Great. Right. But before it goes up, always remember it's like like a sling market is like a slingshot, right? Like before it launches off, it has to pull back. All right. Before it launches off, it has to pull back every time. Before it runs away, it pulls back. Before it runs away, it pulls back. So all we're looking for is like we want to celebrate the pullback. So it's like, yeah, boy, pullback happening. Because once the pullback happening, you know entry is coming, right? And you know potentially what could happen after, which is the market then could continue to shoot up, right? So it's like celebrate the pullback, wait for the pullback, want the pullback, right? So that's why sometimes you may see me not even get in the trade because it's like, yo, I'm waiting for that pullback. All right. And then like maybe like one or two times you might not get the pullback, like market might just give me something short and then boom, run away. But that's when we get to the entries and so forth, right? But in any case like this, the direction of the market want the pullback, right? Want it, all right? Okay. So same thing here. Price pushes down, when price breaks, that's your break of structure. When price breaks, that's your break of structure. When price breaks, that's your break of structure. All right. Now, just like I showed you on a higher time frame to lower time frame, I'm gonna show you this as well, right? Because I want that as soon as we start talking about these entries, it is not, you're not lost. You just feel like, oh, okay, makes sense, right? I'm gonna show you the same thing. It's just what we did, all right? I'm gonna show you the same thing. Watch this, okay? Now watch this. So we're gonna go from just around here, okay? So price was, let's see, in this scenario here, market was coming down, right? I actually don't want to get into trend reversals and all that, all right? So we're gonna keep it simple, all right? So at this point, market was coming down, coming down, coming down, right? It's like this was like the last high point here in the market, right? In this downward move, right? So just follow me, all right? Just follow me here, okay? So it's like this is the high point, price created the low. All right, this was a low, pull back, drop again. Okay, low, pull back, did not drop, did not break past, we push above. Okay, great. So price broke here. All right, so simple terms, just see this as a break of structure. Just see it as such. We're not going into other things as yet, right? Just follow me. Okay. So see this as price broke above here. You got a break of structure. Great. So now what are we looking for? Remember, talk to me. What are we looking for? So price pushed up. What are we looking for in the chart? What are we looking for? What we want to see? What we want to see? Pull back. That's spectacular. You want to see a pull back. All right, great. So we get the pull back. All right, phenomenal. We know the area that we're looking for, right? So we get the pull back. Phenomenal. Okay, that's what we want to see. We want to see that pull back. Okay. Then, for example, right? Because always remember that it is have to go deep to explain certain things, right? But always remember that we have structure within structure at all times, right? So just the hell price was, coming back down here, our market was coming down, but overall we were still in an uptrend, right? Same thing here in a pullback, all right? Let me just put this as an example. So in a pullback, you're gonna see this, like if we were in a downtrend, all right? Like we're gonna see this happen as though we were in a downtrend, all right? Then we confirm basically that we're gonna push back up when we get this break. All right, when price stops doing this, stops following this flow, right? This low, this low, this high, this lower high, this lower low, this lower high, this lower low, this lower high, this lower low, this lower high, then this lower low, and price breaks above that. All right, when price breaks above that, then we know, okay, now we are shifting back to this. All right, which is then basically what we're looking for, which is the up, the down, then the continue up. Okay, everybody following? All right, everybody following? So we got a break here. All right, now we know, all right, now we know overall, we want to see price break this point now. This is the height. Okay, but on the way down in the pullback, we got these points, low, high, we got these lows, we got this high, and we created this low. All right, tracking? Everybody tracking? All right. And as we check, you see, all right, boom, market then came here. What happened? It broke this high. Okay, it broke this high. So spectacular. So we want to see now, is market come back to the area that we're looking at to buying, all right, which is back down here. Okay, and then we go on again, doing the same thing. All right, doing the same thing. We got price break the highs here. All right. So then what we're looking for, same thing to occur. You're looking for the areas of buying. Market came back, boom, we bought in this area. All right. And basically looking for that same thing to occur all the time, guys. So like, it's like high, it's low, right? It's lower highs. We didn't create lower lows. So now we got high, all right? Look, higher lows, all right? And price break above. And what you do the same thing. We're looking for entries to then take the market up again. All right. So I don't want to get too deep into that. Right. So the market structure will be for like another session. But that I just want you to grab the concept. Okay. Of when I say price shifting, right? A structure shift. It is simply where you have price was coming in one direction and then it breaks the flow, right? We get a shift in the structure now. Price breaks that and then we change to the other side of things. Following? Everybody got that? All right. Everybody got that? So just see structure like that on a whole. All right. That's how the market is. It's gonna follow a certain flow, right? A certain order flow, a certain structure flow. Okay. And when that flow is broken, then you could expect the direction to basically change. Simple terms. All right. You could expect the market to basically change at that point. All right. Okay, good. All right. So we here now. All right. So we here now. So now let's get into the entry. All right. Let's get into the entry. Same thing that you guys would have learned, right? Well, actually, let's get an imbalance, then we're gonna get to the entry, right? And we should be done by 8:30, so don't panic. All right. For those of you that yawning on the call, wake up. All right, we're gonna be finishing literally about 20 minutes. Okay, you still with me? Everybody still with me? Everybody following? Let me see who here. Everybody good? Vanette, you good? Trevor, you good? TT, you good? Stephanie, Sophia, Sandra, Raymond, Rachel, Nikki, Natasha, Marlene, Leah, Kishelle, Kay, Karen, Kendra, June, Juliet, Jeanette, Ramel, Hami, Jeannie, Eric, Wilkes, Alicio, Claudina, Bernil, Anita, Anglisha, Anderson, and Akeem. Everybody with me still? Good. All right. If you was not listening, just know you hear a name called, be like, huh? All right. Good, good, good. All right. Let's go. Now, we're going to talk imbalance because this is going to be important for your entries. Okay. So we're going to talk imbalance real quick and complex. All right. Pretty simple. So imbalance, guys, is just is where price is inefficient in one direction. So if price was buying, if there were only buyers in the market, it is said to be sell side inefficient. All right, that's all it is. All right, it's like the sellers they're not where there were buyers, there were no sellers. All right, and where there were sellers, there were no buyers. Because think about it, just logically, if you are in a market with that has buyers and sellers, that means to buy, somebody got to be selling. To sell, somebody got to be buying. All right. So the market has to trade balance. Otherwise, if there were just buyers, the market would look like this. Just go straight up. And if there were sellers, then the market would just look like this, just going straight down. Right? Market would just drop. Okay. But because that's not the way the market goes, right? There must be buyers where there are sellers. That's where we have this order, what we call this order flow. So buys, sells. Market has to trade a balance. Buys, sells. Market has to trade a balance. All right. Eventually gonna go up, right? If there are more buyers than sellers, right? If there are the buyers basically are stronger than the sellers. Okay. So simple, just always remember the market has to trade balance. So imbalance is created when we just have buyers in the market or where we just have sellers in the market. And as a result, the market tries to rebalance itself. This is why imbalance is so important. All right. Everybody following me so far? Everybody following? I'm going to give very practical examples. All right. Very practical example. So see imbalance now as a simple three candlestick pattern. Okay. Three candlesticks. Right. Pattern. Let's see if we get this started out. All right. See, we're back. All right, we're back. So look at this. Like I'm gonna remove this just so we can create this example. So what we want to see now, so ultimately, listen, this is what you're looking for. After that engulfing candle, right? You want to see imbalance created. So what we're looking for example, now we're looking for, let me change this real quick. We are looking for price to give us to print. For example, another, you want to see like another bullish candle, right? It may look like this. It may be like this. It may have a wick on either sides. Like, you just want to see another candle printed, okay? That creates imbalance. Okay, now what is imbalance? Now let me show you. So if you look at this, I'm gonna move this. If you look at this, we had the last seller in the market was here, right? The last seller was literally right there, right? Um, Here. Boom, that pushed the market down. After that, we just had buyers. After that, we just had buyers. What that means is that in this space right here, between the last seller here and this buyer right here, in this area, we had no sellers. Everybody following? Let me know if that makes sense. In this area between here and here, there were no sellers. The market was just going up. Let me know if that made sense. Let me know if you're following. Let me know if you're following. Another time you're gonna break this down even further, right? But I just want you to capture that. You're good. So because in that area there was just buyers, right? There were no sellers. Remember I said the market has to trade balanced. All right. The market has to trade balanced. That is why we get things like this pullbacks, right? So see this as this. We get pullbacks now. So then sellers step into the market to push the market back down to fill in, right? To fill in this space, this that was sell side inefficient. There were no sellers in this space. So the market pushes back down to fill that gap before it continues to then do this. Let me know if that made sense. All right. Let me know if that made sense now. He said, oh, that's how imbalance works. Right? Yeah, imbalance, same thing as fair value gap, all the same thing. FVG. So let me just make that clear. So FVG, right, also known as a fair value gap, is the same as imbalance. Okay? I just use very simple terms for everybody so everybody understand. Okay, because you got to understand that if the market is imbalanced, if the market is supposed to trade balance and it's not balanced, then then it is said to be imbalanced. Okay, I'm gonna tell you about fair value gap. Then we're gonna go deep into explanation, and then like, oh my goodness, what is that? All right, but we understand simple terms. This is how I want you to look at this stuff too. I mean, it's up to you, but me personally, I just like to keep things very, very simple. High fluid language sometimes lose people. You know what I mean? So imbalance, yeah. So what goes up must come down if that's how you understand it, right? But just see it from a sell and buyer perspective because that's what you're dealing with. You're dealing with buyers, you're dealing with sellers. So it's like in this space here, we just had people buying, buying, buying. Example, think about it like this. Person just buying, 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 buying. Well, we need sellers, all right? We need people to sell. Okay. So that's where the market pushes back down. Okay. So with that in mind now, guys. All right, with that in mind, all right. What you want to see is, like I mentioned, you want to see like some candles start to break. All right, some sell candles basically start to break. All right, and push the market back down. You want to see price. You want to see price trade back down within this area. All right. We want to see price trade back down within this area. All right. And I'm gonna use this example, right? I always use this example. I think people get clarity when they do, right? Imagine you were the banks, right? Remember, and you guys can ask me to chat. Remember that the banks control these markets. The banks, the hedge funds, major financial institutions, you know, major companies, right, et cetera. You guys know this. They control the movement of the markets. They determine whether the market goes up and the market comes down. Trump determines whether the market goes up based on his decisions and the economy and so forth. Whether the market goes up, whether the market comes down. Everybody follow? Everybody clear on that? Everybody knows that? All right. So let's say, for example, you were the central bank. All right. Let's say you were the central bank. So you guys should know this, right? This shouldn't be new information. Okay. The banks, the hedge funds, the major financial institutions, major companies, Apple, etc., influence the movements of the markets, right? The banks, the central banks, etc., they are the major players in the markets. They determine whether price goes up or down based on economic decisions that are made, for example, via Trump and so forth. They determine whether the rates, right, whether the value of a currency increases or decreases, whether the gold increases, whether gold decreases, whether crypto increases, whether crypto decreases, whether the US dollar decreases or whether the US dollar gains strength, right? Based on what's going on in the world, that is what influences the movement of price. That is what influences whether the market goes up or whether the market goes down. If the market don't look good, if the economy ain't good, expect the US dollar, for example, to go down. If the US dollar goes down, people are going to put their money in gold because gold is a safe haven. Expect gold to go up. All right. So it's economics at this point. Okay. All right. So, with all that being said, we keep it simple. Imagine that you were the banks, right? Remember, you're trading. Okay. Remember, the banks basically trading. All right. Imagine you were the banks and you input. This is your sell position. Remember, you control the markets, right? And you input a sell position right here. Okay. Remember, when you sell, you're looking for price to go down. Correct? That's a question. When you sell, you're looking for price to go down. Yeah? 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 If I sell, I'm looking for price to go down. Good. So if I sell, all right, I'm the bank. I control the markets. Okay. I push the market down at this point. Then remember, I'm the banks. All right. So at this point, I push the market up. Okay. I put a buy position in. I push the market up at this point. what happens to myself? Like right now, price is up here. What is happening to myself? Am I in a negative? Am I in a positive at this point? Right, my price is up here. Is my sell in a negative or positive? Talk to me. Is my sell position in a negative or positive? Perfect. My sell position is in a negative, right? What is the bank? So why am I going to take a loss when I'm controlling the markets? Why am I going to take a loss? I'm running things. Why am I going to take a loss? So here's what I do. I push the market up, and then at this point, I push the market back down, right? I push the market back down to where I entered the market, right? Push the market down so that I could break even or maybe even profit on my sell position, right? So I bring the market all the way back down so that I could break even on this position, and then, right? And then we continue to push the market in the direction that we want it to go, which is up, right? So then our buy position continues to profit. That makes sense, right? That makes sense. More sense, so is it buying? Fine, too, right? You push price back down, break even, right? You lose nothing, yeah, and then your buy position profitable still. Boom, you send the market back up, bam, bam, and we going from there, right? We going from there. Everybody that don't know what's going on, that was selling at this point because they see a sell candle, boom, market push up, bank take their money, all right? All their stop losses and so forth, bank take the money, right? And then they break even afterwards, boom, and then continue, right? We following? All right, we will get into another session. We will go deeper, into liquidity and so forth, right? But I just want you guys to understand that. Good, good. So just adding perspective. All this is the foundation, just laying the foundation for you guys, right? So that when I show you this, there's no, like you're not him a hoeing, you're not unsure, like you are clear. Okay. So we went through engulfing candles. You see how it plays its role here. Okay. The engulfing candles, right, will create that imbalance. Okay, hope you guys tying everything together. The engulfing candles, boom, that creates the imbalance in the market. So where you see engulfing candles, trust and believe, you're gonna see imbalance. Okay, so well, more often than not, you're gonna see imbalance, right? Then you have, right? Then you have, for example, like these I'm gonna use these candles here just to show the same example. So like here we have buys, buys, buys. So, like all this, right? Typically, what will happen, right? So let me just put this as an example. Typically, what will happen is you may see, like in this three candle push, you may see candles with a wick, right? So a wick like this, right? And maybe a wick like this, okay? So what these wicks are, for example, is like price came here and sold down, right? Price pushed back down, right? If price pushed back down, which means there were sellers, push the market down. Price was here, right? Price came down to this point, right? So down to this point, push back up, right? So down to this point, push back up, okay? Price was up here at this point, sold back down. So what that means is, it means that the market was sell side inefficient between these 2 points, from here to here. Okay, that's your imbalance in the market. Everybody follow that? All right, that's my imbalance in the market. So between this point and this point, there were no sellers. Okay, we got that one, right? We got that one. Same thing here. It's like this. So if you got a scenario like this, where like you see the market like this and the market like this, there's no imbalance. Okay, the market traded balance at this point, right? There's no space. Okay, like we don't got no space. Okay, market traded balance. Price sold here, right? Price bought here, price bought here. All right. Like there was no imbalance at this point. Okay, market traded balanced. You good? I give you guys every scenario there is. Okay, good. So now we're gonna get into the entries. All right, now we're gonna get into the entries. We laid the foundation, right? We got 3 minutes. I probably may go, to like 22, 22. All right. So let's get to those entries. Now, guys, the entries will involve these things. It will involve this structure shift. It will involve an engulfing candle. It will involve imbalance. Once you understand these three things on any level, you can take these entries consistently, confidently, right? And I'm going to show you that you can go ahead and practice. Okay. All right. So the first thing that's obviously going to be important when you're taking any of the entries is that you want to be looking at your entries via a supply or demand zone, or like I mentioned, basically your engulfing candles. All right. So let's use this example. All right. Let's say that price came down, bam, into this area. It has your attention now. Okay. You are locked in now at this point because price just went ahead and tapped into the area that you are looking to buy in. We are taking our entries from a 5 minute perspective. Okay. A 5 minute perspective is what we're taking our entries on. Now, we're going to go to 5 minute. Let's see if we can find back that area. I think we could. Gone too far? Aha. All right, here we are. All right. Right. All right. So this, right? This would be actually one of those entries that ran away and left you, right? But regardless, I'm gonna show you, right? I'm gonna show you the perspective that you want to carry, how you want to execute the markets and so forth. All right. So from a 5 minute perspective, remember what we're looking for? We're looking for that engulfing candle, right? We're looking for the imbalance, and we're looking for that shift in structure. Okay. So we can see, so from a 5 minute perspective, right? Remember, price obviously is when it's trading down into your area, the market is creating highs and lows on like a 5 minute perspective, all right? Like market trades down, trades back up, it trades down, it trades back up, it trades down. Okay, you see that? So what we want to see is as price starts to shift. Okay, so we want to see price break this area right here. All right, we want to see price break this area right here. We have that engulfing candle. All right, you can see the engulfing here, right, in a 3 candle pattern. And what it basically did, right, is it created the imbalance right here, right? I mean, I'm gonna move this just so that you can see what I'm saying. All right. So we got last sell down. All right. And this candle wick right here, carry it across. All right. This right here. Right. So this would have been my area for entering the market gains, right? Just this one just so happened, it just didn't pan out exactly how we would be looking for. But this is how you would be setting up for the market. There's two ways you could run this. The two ways you could execute this. You're executing it either from this part of the block right here, right? The candle that, remember, same thing that we spoke about, right? The candle that got engulfed. So from here, right, down, you're executing your trade within here, right? You could go the safest way I would say is You could run your entries literally on the open of this candle. All right, so this would be your entry. Okay, and your stop would just be below that. All right, or you could go 50% of the imbalance area, right, which is a much higher entry, to be honest, right, which would then look like around here. That would be your entry with your stop below, guys. And literally, that is it, right? This is why I laid the foundation for you, right? So that, it is clear when we do it. So you're looking one, you want to see price give you that structure shift. You want to see price if the market was coming down, creating lower lows and lower highs. We need to see price take out that one of these lower highs, create that imbalance. Then we set up our entry to enter on the pullback into the imbalance. And then our trade setup literally would be within there. Stop loss below the low that was created. And we are off to the races more often than not. Let me know if that was clear. I'm going to give you more examples, all right? But let me know if that was clear. Something simple that you could continuously execute. Let me know if that was clear. Same thing, we just went over it, all right? Let me know if that was clear. Because that's all you want to see on a 5-minute time frame. Structure shift, imbalance, all right? Structure shift, imbalance, all right? When price trades back into the imbalance, execute the trade, all right? I'm gonna give you many examples. Let's go. All right. So I'm gonna just go based on the areas that we looking at. Okay. All right, let me go back up 15 minutes so I can find these areas quick. Let's go. Let's go. All right. Since we're here, let's use this. All right. So price traded into your area here. All right. First thing, what's the first thing we're looking for? Somebody tell me. First thing. So obviously this is you learning now. What's the first thing you're looking for? The price is in your area now. Bam, has our attention. We on the 15-minute time frame right now. What's the first thing we want to do? Mm-mm. Well, we already got the area established. We already got the area established. All right. We already got the area established. We on a 15-minute time frame. What's the first thing we want to do? Come on, guys. Drop to the 5-minute. Perfect. Right? We're going on the 5-minute time frame. All right. So first thing we want to do, because remember, we're taking the entries off the 5-minute time frame. All right. Cool. Next thing, what are we looking for? What is it that we're looking for? Prices in your area, phenomenal. What are we looking for now? Mm-mm. What are we looking for? No, we're not. Thank you, Akeem. You're looking for that structure shift, right? Guys, don't guess. Do not guess. All right? This has to be systematic for you. Price is in your area. You can't be looking for engulfing. You're looking for those things yet. You want to see price shift first, right? Because remember, if price is in your area here and you're looking for sells, right? And right now, look at it like this. Right now, price is creating, all right? We got higher lows, higher highs being created, like price created highs, Price created lows, price creating higher lows, right? We got higher highs, we got higher lows, we got higher highs. So what is that saying? If you're seeing higher highs and higher lows, they're not saying to you that the market is still going up. Correct? That makes sense? Let me know. If you're seeing higher highs and higher lows, that is saying the market's still going up. Okay, great. So right here, higher lows, right? Like we still got higher lows, and then boom, higher highs, all right? Price traded into our area, but we still got higher lows and higher highs. So that's saying to me, like, bro, like, we ain't ready yet. Right. So this is how you stop yourself from getting in the market too early too, right? Because then here, boom, you still got a higher low printed, right? You still got like higher lows here printed. But then it's like, aha, we did not print a higher high, right? So now we got like a lower high here printed. So now you got my attention. Okay. Now you got my attention. Okay. So now what we want to see now, talk to me. Akim said it, you want to see that structure shift. Okay. You want to see price, take the previous low. Okay. You want to see price take the previous low. Okay. So here, for example, I want to really consider this to be a break though. All right. Your break would have come, that's a wick, right? That is a wick. So your break would have come here. Okay. Boom. You got that shipping structure now. Phenomenal, right? Fantastic. We are glad to see this shift in structure, right? At this point, right? At this point, we got price pushed down. You want to see the market pull back, right? And run your setup. You got a one, two, right? Three candles here. I mean, really and truly, we could probably look at this on like a 15 to see the print. Right. So you got like a big engulfing here on a 15-minute time frame, right? Like price pushed down significantly. On a 15, on a 5 minute, this particular candle is you just got two candles pushed to the downside, right? That is enough momentum though, right? That is enough momentum. The size of these candles is enough momentum that you should definitely be setting up for your entries, okay? So price push down, broke this low, like it closed below this low, you got that shift in structure. At this point, all you need to see is the market pull back up, right? And then you can execute your order, right? This one, to be honest, this one not as clear, right? But this setup, I would run the same way, right? You got the shipping structure, okay? You got the shipping structure, right? Price give you a pullback right here. There's another one that probably might have just run away. Price give you a pullback and then it sank off, right? And then price dropped from there, right? So literally, you could get the pullback, right, and run your entry. Once price pulls back up, somewhat, into your like this would have been perfect to be quite honest, right? This would have been perfect, but I don't consider this to be a close. Yeah, where you got three candles, boom, 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 imbalance created, price traded back into the imbalance, all that good stuff here, right? Price traded back into the imbalance, and then give you that drop. This, it wasn't as clean, right? It wasn't as clean, right? Whereas we got just this candle one, two, right? And this one right here, give you a wick and so forth, right? Wick on both sides, right? And then dropped. Okay. So not as clean, but same concept applies, right? Market dropped off at this point, right? I'm gonna give you guys some more examples for sure. Don't worry, right? So but literally, that's the system you want to follow, right? It's like the first thing you gotta see that shift in structure. If you don't get the shift in structure, then you know what I mean, we're risking, right? Even this, like I said, this would be risking. right? Because it didn't close below, right? It didn't close below. It shows you where the market is reaching. Granted, right? This is showing you where the market is reaching, all right? When you got sell candle with a wick down at the bottom, it shows you, all right, market is reaching for that area, right? So it's possible, yeah. But then the market pull back up into the imbalance and then give us the drop. Okay. So this would have been a clean break at this point, taking the lows, small pullback here, and then gone. All right. You can go through it some more. Okay. We're gonna go through it some more. All right. So let's go back. Let's go back. All right. We're gonna go with structure. All right. We're gonna go with structure. All right. This is the first one we started? No, it's not. It's it. Okay, cool. So we started here. All right. So let's go here. All right. Cool. So we here, 50-minute time frame, right? We can even use this as an example here, right? Let's come down. Let me put an arrow so that I know where we are. Time is it? It's 8:44 days. We gonna where we getting there, we getting there, we getting there. All right. Just put an arrow here real quick so I know where to find it. All right. So we had the area, price came into the area, top 10, great, right? Now we're looking for entries. Okay, 5 minutes. Let's go, let's go, let's go, let's go, let's go. All right. Boom. All right. So, for example, same thing, same scenario, right? We have this one, that one, not as clean. What? Yeah, not as clean, but nonetheless, right? This is how it goes, right? You're not gonna get it as clean all the time. So same thing here, price coming down, right? Boom, boom, right? Market creating lows, etc. Right? Right? Boom. Touch the low, then we start to see price break above. Okay, here. So we got the push up above. This, like I said, not as clean. You know what I mean? Candles gonna do what candles is do. Right? So if you have, for example, here, price pushed up, broke above. Okay, so we broke above this height right here. All right. We got the engulfing as a confirmation, right? This one actually traded imbalance. Okay. This one actually traded imbalance, right? Which would have been in this area here. We got all of this, as your this. So this is where it could get a little technical, right? Because these kind of candles, these would be like candles that are reaching above and so forth, right? I don't want to get into technical. But basically we want to see here, see how we got price push above, right? These three candles, boom, price pushed above, broke above this lower high, okay? And then we're looking for price to basically trade back down within this area here, right? This is one of those scenarios that, to see everything, we probably might gotta hit like a 3 minute time frame. But I don't want to go that detail, that deep for you guys, all right? So this scenario, let's use here, all right? Let's use here where we had engulfing candle up, right? Price to here, right? This would have been your break above. Mm, yeah, we got some as a wick. So we want a clean break above, right? Which would have been here, right? So this is your break here, right? Price came, broke above, right? And then what you want, once again, you got the engulfing here, you got the imbalance created. So that would have been just before this wick, right? So this is what you would have seen, okay? So on a 5 minute, this is what you would have seen. Price broke above, you got your imbalance, right? Left. You want price to trade and tap back into, remember I said you could either take your entry here on the order block, right? So this is where you'll be looking. Either or is fine. You could either go here. This is, I would say, go to the low for safety. You could target the highs here, all right? So what you're looking for now, you got the break, you're looking for price to trade back into this, okay? And then give you the push, all right? So like that whole price literally like that one would have been pretty quick. You literally just got the top right back into that area and then the market pushed off, right? So you want to see price just pull back and go out to the area, right? Like I said, is either price will either trade out of your imbalance or price will trade off your order block. In this scenario, right, price would have come straight off the order block, right, which would have been here on a 5 minute and gone. Okay, price would have come straight off that order block and then pushed up. All right, everybody following me? All right, we're gonna do some more examples. We're gonna find some cleaner examples as well. All right, but literally, right, once you follow this principle, let me see, right? Once you follow the principle, got that engulfing, the scenario where you may get an imbalance as well. Like this particular one, we didn't get the imbalance, right? Like price just literally just tap back into the engulfing, the order block, and then we pushed from there, right? So when all the quote unquote stars align, right, you do the same thing. Get the structure shift, get the imbalance, run the setup, right? Or it could be the order block, like I mentioned, right? So we're gonna go again. Let's see. All right. So this is what we didn't look at that. All right. You guys following? Everybody following? Everybody following? Anybody lost? You grab the concept. It's simple. All right. So once again, let's go. So we got here, right? So we on a 5 minute time frame. Okay, we on a 5 minute time frame. Price traded into your area right here. Okay, this is the area that we were looking at. We got the engulfing. The engulfing was it here or was it here? Nonetheless, let's say it was here, right? We got our engulfing, we got imbalance created. So there's two things. We got the imbalance left behind here, and we also have the order block. Okay, so this is your order block. This is your imbalance. Okay. So this is your imbalance. This is your order block. Okay. So we have, once again, this is price coming down. So we got market pushing down, creating the lower lows, the lower highs, the lower lows, the lower highs. All right. And then market creating lower low here. And then we got that break right here. All right. We got that break. We got that break right here. Price came up, broke above. Now we're waiting for price to tap back into either the imbalance. Like I said, you could either go 50%. This is the example. You got to go 50% of the imbalance, or you go on the opening of the order block. Okay, so we come here, price trace back into either or. Let's see, you took an entry. If you took your entry here, once again, stop below, right? It's going to be a bigger entry. If you took your entry at the opening, which is here, right? Took your entry here, which is at the opening. Same thing, stop below. No, this is where, right? You could do the same thing again, right? You could literally do the same thing again. So price is in that area, and what we doing, right? Literally, this is your lower highs, this is your lower low, this is your lower high. Like you could wait, no, bam, wait for that structure shift. Price breaks above, right? See here, price breaks above, boom, right? We waiting no or pull back. Once you get the pullback, you have your imbalance. Once again, created right here. And your order block is right here. All right? Let me just shift so you guys can see. Okay? Your imbalance is right here. Your order block was right here. Same thing. You run the entry. Here is either one entry on the opening. Stop loss. It's going to come right below there. And you're going. All right? Everybody following? Let me know. You guys following? All right? Because then here, once again, like I could literally just show you this over and over. This is a really, really good example at this point. Here, right? Once again, you got like a break. Once again, price comes up, it breaks. Okay. You have imbalance left behind at this point, right? Like this pulls everything together, right? You got imbalance here at this point. You have the order block here at this point, right? And you could go once again either with the imbalance, 50% of the imbalance, which is here, or opening of the candle, which is here. All right. And you put another entry, for example, here, stop loss just below. Right. And boom. Right. Because that's all literally, guys, listen, this is all you're waiting for. Right. When price trades into your area, oops. Oops, oops, oops. When price trades into the area, we just want to see market. This is there. We want to see the market shift first. So you got the market shifting first. It confirms the direction we're looking for. It looks easy after the market did what it did. Right? So so this and that is why I told you guys in the last session, get the replay tool, right? So that you can run scenarios like this, right? Whereas it's like, okay, if this is where like go somewhere random on your chart, for example, if this is an area that you're looking at for entry, then all you're looking for, right? What you're looking for, let's clear this. Use the principles, right? Use the principles we just went through. Okay? Use the principles we just went through. If you're on a 15-minute time frame, okay? Well, first thing you got engulfing candle, phenomenal, right? We know that price is going to the upside. We got price, breaking structure and so forth. So we're looking for buys, right? This scenario right here, right? This could have been like a first move, like I mentioned to you, right? Whereas, price traded into this area here, that could be your first move. Let's say for whatever reason you missed this and you came and you saw the market at this point, right? So now we're looking at this through the lens of, okay, we got an engulfing candle. Let's take this area here as an area of potential entry. Okay, we're looking at that as our area of entry. Okay, so what we're doing at this point is we're waiting for price to push back down, right? We got the confirmations from a structural perspective where price is going back up, right? So we got price taking this previous lower high, price taking this previous lower high, great, right? So now we want to see price trade back down or back down into this area. We also have imbalance here. So there's reason for it to come back. Okay. So there's reason for price to come back. Great. No, we wait. All right. We wait. Boom. Now what you could do, right? It hasn't reached this yet. What I do is I take, for example, a horizontal line and I put it right, put it there, and it would set, for example, an alert, right? Can't do it here, but we set an alert on that line so that when price reaches there, then I know, okay, good, you're at my area, pay attention. Okay. So when price gets down there, all right, when price reaches, then we're looking at the chart. Okay. Now we're looking at the chart. So when price activates our area, we're looking at the chart. We're gonna go to a 5 minute time frame because remember, we're looking for our entries on a 5 minute perspective. All right. But now we need to see price shift. Okay. So remember, so it's actually literally two types of ways that you can enter the market. All right. We will touch that another time. All right. But literally, it's like here on a 15 minute, you either had the imbalance here. Okay. We were on that was on the 15 minute. Actually, don't let me tell you that. Let's stick to the five. All right. But nonetheless, you had the imbalance here created, right? All of this imbalance right here, right? You got all of this imbalance right here created. And then you have the order block here, right? As another potential entry. Okay. So, but let's say you see this. So those are two other potential entries. We see this like this. We need to see market shift. Like there's right now we just consolidating. We got lows, right? We got lows being created. We got lower highs being created, right? We need to see something that says, okay, yeah, let's buy, right? We need to see a shift in structure, all right? All right. So price push lower, great. So this is our low. This now becomes our lower high, right? And this is how you go through your chart, right? This is literally what I do. This is how you go through your chart, right? Price pushes lower, right? We got a lower push here. So that's my low now, right? It's my lower high here. Okay, this is the low. This is the this is the low here, lower high, sorry, that created the lower low, right? This is the lower high that created the lower low. Price push here, pull back up, created this low, right? No, lost your money doing what? You have no confirmation of entry yet. None. Why are you in the market? All right. Anyway, so you got price push back up, right? It broke. Phenomenal. Okay, phenomenal. It broke above. We want to see that close. Once it closes above, start to set up for your entry, right? You have here, all right, you can utilize that as your entry. And as price builds the imbalance, then you could set up, if you want to set up on the imbalance, then you start to set up your trade in that manner. Right? Is it why you in the market? Why you lost money? Like you in the market, yeah, get that shift in structure. right? You're looking for the buys, you know, get the shift in structure. Well, you had no reason to buy before, all right? Like nothing here said buy. Market push down, bam, right? So no, we just want price to pull back. You know what I mean? It's like, no, we got to pull back, right? We want price to pull back. Remember, you got the imbalance as one area, or you got here as your order block as another. Those are your two options when you're entering the market, right? And that's it, guys. Boom, you get in the market. So they here, right? If you got in here, right, off of this, you get it off of this, or you could get it off of that or the block. I mean, this one I would say that this one will already been taken, to be quite honest. Like price pushed up, pulled back into that already. So I would have gone off this area if I honest, right? I would have gone off of this area right here and taken my trade here, stop. We should be right here, right? Stop here, and then target back the highs, right? Target the highs. It's either it's gonna play out, and that's all you gotta feel. It's either it gonna play out or not, right? It's either gonna play out or not. That's all, right? Here, market going out, right? That's your entry. Market pushed down instead of going up. But so this is why, right? This is why I said this is why I went through everything I went through before. Right? We're gonna need it's actually 9 o'clock, right? As we're gonna have to continue this next session. Okay. But everybody capture what is I'm saying. Let me see how many persons still here. All right. Okay, everybody basically still here. All right. Everybody capture what I'm saying. Right. We're gonna need some more demonstration like this, right? And this is why you get the replay tool, right? Get the replay tool. Because you got only at this point here this was your shift in structure. Remember, we spoke about break of structure. This was your shift right here. Price then pulled back into your imbalance, into your order block. Then you execute. Stop loss below, and boom, you got the trade that you were looking for. All right. So, keep it simple, man. Keep it simple. Like I said, I showed you guys literally three things: vertical structure, imbalance, are the blocks, right? Which is basically typed into engulfing candles. Once you could do that, right, and do it consistently, right? I know for sure it's going to take practice. I just want you to understand the principle, understand the concept, right? Because that is literally all you need, right? And that's how like I execute trades every day, right? I execute trades like that every single day, right? Based on those three things, right? Sometimes, of course, like you may get um um a lot different type of setup, right? But for the most part, that's what you're looking at, right? So if we use this once again here, engulfing candle, imbalance, right? All this was imbalance, price traded back up into the area. Wait for price to shift. When it shifts, pulls back into the imbalance, then you run the setup. If, for example, this particular area I don't like for any buys, to be honest. Right? If I had to buy this, it would have been back in here. Right? It would be here on our so price came right down into the area. Right? You see that once again. Where is it? All right, cool. So like perfect. So this is an area that I'm looking to buy in, all right? Just like I'll show you guys that later. All right. But if this is an area I'm looking to buy in, I need to see like especially price pushing down hard like this, you gotta see some kind of shift in structure, right? Like we ain't getting nothing, right? No shift in structure here. All right. Price just pushed down here, lower high here, market traded lower, right? Fine. Market came right back up into it. Okay. Or it came right back up. So now it's like this. I gotta see price break above this area for me to even think. about taking anybody's, right? And that break came right around here, right? Then it would be looking for, some type of entry within this area. Nothing, I don't see anything like clean enough. Right now, probably come, yeah, it's not even clean enough, to get in on this, right? Like here, probably the best area, yeah. And then, like you get a buy back up, but you know, as much as possible, you're looking for as clean as possible a setup, right? So don't get into buys if there's no shift. For example, don't if the market is coming down, don't try to catch a falling knife. That's what most people be trying to do. Say market pushing down, and you're trying to buy here, right? You're trying to buy every time it push down. Every time it push down, you're trying to buy, right? It's like, bro, wait for price to shift. When it shift, then you get in the market, right? So unless price does something like this and then breaks, boom, no, you got a shift. Then it pulls back. Then you get in the market to push the price up. All right. Anyway, guys, we will continue this next session. All right. This is why it's important, to like come to these sessions, all right? Because yeah, we definitely gonna need more time for this, man. All right. We definitely gonna need more time for this. So I hope you guys learned something, right? I hope that you guys, like go ahead, get the replay tool on TradingView and practice. Okay. Uh, practice. Yeah. Let me know if this helped you in any way. Let me know if things made sense. Let me know if anything clicked. All right. Okay, cool. Cool, cool, cool. Yeah, most sessions are posted on my YouTube. All right. So literally you can go onto my YouTube and you will see the sessions there. Yeah. Share my screen real quick. I have a bunch of stuff there. So full breakdown, how to enter, systematic approach, market structure, supply and demand, liquidity, market structure, supply and demand, part one, Forex entry models, like a lot of stuff here, right? Forex trading mistake, enter it too early. Like there's a lot of information in here, guys. Like so, plug in. Okay, plug in, search my name, Kate Ashley, and you will find the necessary information here on YouTube. Okay. Uh, have a promo for Trading View. If you have one, is he asking? Awesome, TT. Glad to hear. Are you still up? I'm glad to see that. I'm glad to see that. If I got a promo for Trading View, I don't know. Let me see. How would I know that? I can give you guys something I don't know refer a friend. Oh, oh no, I would get $15. You and your friend, oh, actually, you will receive $15 too. Oh, wow. So anybody want to refer him? We both made love 15. All right, I get 15, you get 15. All right, where's the purchase of any? Okay, okay, okay. Anybody like what? Because like, bro, you got 15, I got 15. Well, shoot. All right, here's the link. So that's it. I guess that's the discount. Remember, you get $15 towards purchasing anything on what's the name? Anything on on TradingView. Yeah. I didn't know that, man. I didn't know that. Okay. Okay. Yeah, so that's the link. The link is there. So you got 15 hours towards the purchase of your um, trading view. All right. So what I recommended, guys, is to get the essential package. I think it's called on trading view. Um, so that you could do the replays, so that you could practice. All right. Can I have the link to your YouTube? Just search my name. That's YouTube as well. Um, I got a lot of information here, guys, like a lot, you know. Uh, Even here, like as I look at this too, like this trade that you can see the same type of setup here and going though before we get into more teaching. Right? But you can see the help price push down, pull back up here, push lower here, right? Like this would have been your last, whoops, this would have been your last lower high basically at this point. So you just want to see price push above that and price push above that, all right? Give you a pullback, then run it, right? Run the setup like this. You got the imbalance right here, all right? Where price traded top into the imbalance and then it pushed again, right? Then price pull back down into this or the block. That would have already been taken though, right? Here, boom, and then could push up again. I don't like the area, so you're not really looking to run anything at this point. But this, it could get a little push back up as well. But yeah, guys, so next session, we would go deeper into more, I guess, more examples, less teaching. We would just do an example after example after example and go from there, right? So with that being said, guys, have a good one. Have a great night. Be blessed, and we're gonna get some more trays out as time progresses. All right. Have a great December. You are most welcome.